Hi everyone, welcome back to our channel Curious Minds. In today's video, I'm going to talk about the Canadian personal income taxes and how it compares to the US. Anyone who decides to move to Canada on a permanent residency or on a work permit has this one question in their mind. How are the Canadian personal income taxes when compared to their home country? The reputation is that the Canadian taxes are higher when compared to some other countries such as United States. Well, that is true when comparing the actual percentage of taxes paid, but you get a lot more benefits compared to some other countries. I'll divide today's video in two parts. First, comparing Canadian taxes with the US taxes, and second, a tax liability for a person living in Canada and working in the United States. So let's take a look at the first part of this video. So let's look at some of the basic differences between the US and the Canadian taxes. The tax filing deadline in the US is 15th of April, whereas that in Canada is April 30th. US taxes consist of federal, state, Social Security and Medicare taxes, whereas Canadian taxes consist of federal, provincial, Canada Pension Plan, and employment insurance. In Canada, the employment insurance is paid partly by the employee and partly by the employer. The employee's portion is 1.6% of the gross employment income up to a maximum of $860, whereas the employer's portion is 2.2% with a maximum of $1,204. In US, employment insurance is paid solely by the employer. There are multiple tax saving measures in both countries. In United States, you have the IRA, health savings account, you have the 529 education plan, and 401k investments, and medical expenses over 7.5% are tax deductible. In Canada, the tax saving measures include registered retirement savings plan, which is similar to a 401k in the United States. You have tax-free savings account, registered educational savings plan, and claiming any medical expenses over 3% or $2,268, whichever is the lower amount. Other major differences in US and Canada filing are: in United States, a couple files their taxes as married filing jointly, whereas in Canada, this is not allowed, which means there should be separate filings for every individual. In United States, the advantage of married filing jointly is that the higher tax percentage of the higher earning partner is offset by lower tax rate of the other partner if there is any difference in the income of the couple. In Canada, since the filings are separate for every individual, this is not ideal if only one partner is earning or if one partner is earning significantly higher than the other partner. Here, the higher income partner will end up paying higher percentage of taxes. The other major difference in the United States and Canadian taxes is that mortgage interest payments on the primary residence for an individual are tax deductible in the United States, whereas in Canada, mortgage interest payments are not tax deductible. Now let's consider an example of an individual earning $80,000 in 2019. For this example, I'll consider an individual living in Michigan. The US tax liability for this individual would be $20,108 with an effective tax rate of 25.13%. This same individual living in Ontario would end up paying $30,341 Canadian dollars with an effective tax rate of 28.46%. As you can see, when we compare the two countries, the Canadian taxes are slightly higher by approximately 3.3% from the US taxes. Again, it would differ by which US state or Canadian province the individual is residing in. But that 3% would be more or less comparable to the health insurance premium cost if you're paying out of pocket. On the other hand, you will be saving the health insurance premium cost since healthcare is free in Canada. Here's the US federal marginal tax bracket. And here's the Canadian federal marginal tax bracket. Now let's discuss the pros and cons of the US and Canadian tax system. The pros about the US tax systems would be that employment insurance is paid completely by employers and mortgage interest on the primary residence is tax deductible. The pros for the Canadian tax system would be that healthcare is free, there's paid maternity leave for 15 weeks and additional paid parental leave for 40 weeks. Charitable donations are tax deductible for up to 10% of your income. The cons about the US tax system are charitable donations are tax deductible only up to $3,000 and the added health insurance cost. The cons about the Canadian tax system are employment insurance is paid partly by an employee and mortgage interest on the primary residence is not tax deductible. Now let's go on to the second part of the video. Consider an individual living in Ontario, Canada and working in Michigan, USA. In this scenario, the person will be paying taxes in both countries. But since Canada has a tax treaty with the United States, it gives a foreign tax credit for the amount of taxes paid in the US. This individual will first pay their taxes in the US and then pay the remainder of the taxes in Canada. Let's consider an example. For an individual earning $80,000, which would be equal to 106,000 Canadian dollars at an average rate of 1.33 Canadian dollars per $1. The total effective tax rate in United States for this individual would be 25.13%, whereas the total effective tax rate in Canada would be 28.46%, with a difference of 3.33%. This is the difference that the individual owes to Canada. Now let's discuss some additional tips. When you first move to Canada, the taxes are prorated from the day you start living in Canada and do not have to pay taxes for any income earned that year prior to moving to Canada. Average dollar exchange rate for the year is calculated if your earned income was from outside of Canada. Foreign tax treaties have been signed between Canada and multiple other countries, including India. So if you have income outside of United States and Canada, a foreign tax credit will be given to you for the amount of taxes paid in that country. These are some of the basic information on personal income taxes in Canada. This video should help you compare the taxes in both countries and in making your decision accordingly. Thank you for watching this video and see you in the next one. Until then, stay curious and be safe.